The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 9th of June. We're looking at the Dow down 115 at 42,644. So a couple of things. Number one is when there is a serious signal to sell mode designation in the general market, what you see is there is some bad news that's filtering into the market. But let me put it this way. There's some news that finally the market perceives as bad. That's really the way it works. You can have the same news on Monday, nothing. Same news on Friday, nothing. Same news suddenly on 2 days later, and whoosh, the market tanks. So we haven't got that yet. We've got signs that there's a lot of toppiness, just shorter-term toppiness like the daily charts. We haven't done anything about it just yet. I'm very close to maybe doing something. Why? Because let me show you something. Look, here's the Dow. There's a new recovery high at 42,924. I can call that a G/C. I'm calling it right now a C in the Chapman methodology. When you get to a D, other things can happen. You can't anticipate things unless you're having other techniques that you're using. But in this particular instance, the 9 is over the 14. The MACD is, and that's good. The MACD is just down a fraction, but it's flat, which means you keep the last designation in place until it changes. The stochastics just under 80% to 75%. On-balance volume is pulling back. So I've got plenty of signs saying from the 42,842 high in mid-May to the low that was made in the 41,400 area, 600 area, to this where we are now, you've really taken about a month, and you haven't really gone anywhere. You've gone sideways, but you haven't broken down. So sideways is still good in this market. And look at this. This is Monday, 38 minutes into the trading day, and that 9-period moving average in the weekly chart has finally turned positive, but we have to wait all week until 4 o'clock on Friday to see whether that 9-period moving average crossing positive, remains that way. You can't just do this, a weekly chart. You can't talk about it as if it's done. It's just begun the week. Look at the MACD, still good. Look at the stochastic at 76%, just like the daily. It's just under the 80%. So it's not great, but it's okay. The on-balance volume is very good. And look at the monthly chart. Great candle from the April, the April low to where we are now, higher highs. Even this month, June, we made a higher high in the down. That's good. So I'm not looking at this as if, oh my God, this is just terrible. But I am saying, look, let me just go through these first before I go on to other things. S&P, same thing. Just look at this, squeaking to higher highs from the 5968.61 high of around about the 18th, 19th of May. And it's walking the 9-period moving average. The 9's above the 40. It's not great, but it's not bad. The MACD is a bit negative, but it maintains the last designation, which is still up. Stochastic's great at 86%. On-balance volume is good. Weekly chart is really good. Look at this, all-time high of 6147.43, and we are, 145 points away from that. You could do that in a second, but we haven't, and that's really the issue. And that's why I'm saying I think it's struggling a little bit. It's not bad, but it's struggling. Let's go to the QQQ, NDX 100 trading. Oops, where did I type that? There. So NDX 100 trading at 530.96 at a new recovery high. All-time highs. Did I not type that in? That's silly. Oh, I typed it into the daily. I forgot to put it into the weekly. 539.15 was the high in December. Pulls back quite sharply to under 500, and it suddenly snaps back, and it goes to 540.81. Let me just type that in so I have it there. just a fraction. Remember, I talk about these double tops, 5.81. So you've gone less than 2 points above that, and then you take a tumble and you slump all the way down to the 400 level. Boom, you come all the way back in a V-shaped pattern. This is really good. Single leg A to the upside. And what do you have? You have the price way over the 9 in the weekly, the 9's over the 14. The MACD is really strong, stochastic strong at 89%. On-balance volumes, very good. And the weekly chart looks fabulous. So I don't want to get in front of this. And I was tempted to do that today. And I said, no, you did it a week ago. Was it 2 weeks ago now? And then the market did pull back each day after that very sharply, but then it came strongly back. Just wait, have patience. You'll get there. In the meantime, so the QQQs are doing very nicely. Hey, look at this. IWM, the Russell 2000. It is up today, up $1.50 at 213.49. A break away from the 200-period moving average, which was the magnet. I use these technical tools. I just have them in my large Sears and Roebuck. And does anybody know what Sears and Roebuck is anymore? Anyway, Sears and Roebuck toolbox. And the further it pushes away from the 200-period moving average after it being this, look at this. Once it broke down back in February into March, and that became a resistance level, it hasn't been able to take it out until the last two sessions. And that, to me, is a big positive. It is in the leg C in the daily chart. And I'm going to put it together with ARKK. They don't go together necessarily, but for me, they're in the same category. Underperformers. So the Russell 2000, that's very large. ARK Innovation is not as large, but look at this. You're getting an improvement. You've got a leg E/C in the daily chart. Nice action. Up today, 40 cents at 61.53. It did at 62.34. Look at the weekly chart, how it's improving. Look at that monthly chart. It was horrible. 29.43 in December of 22 after being at 125.86. I mean, really. Almost 100 points down, and then it comes back. Now it is coming back. The monthly is improving. So I'm impressed that this market somehow or other manages to rotate into various areas, sectors that were lagging, and that is important. We saw that. It's exactly the same thing in gold. Look, gold is down a tad. It's down 1. At 3345.9 in the continuous contract, went to the Chapman Wave inside track repellent zone, and now it's struggling. But look at silver. So this is what I keep talking about, that there's a rotation going on even within sectors. Look how strong silver is. It's up 58 cents today, 36.72. Breaking out in the weekly chart. Monthly chart has a target, and that is the continuous contract, so that price can get smoothed out, but I'm giving it to you right now as it is. So that'll be the February of 2013 candle high. That's not the high. The major high just before that was in October of 2012 at, what was that? 47.63. But I like to go step by step. So the next step up will be this level of 39.25. And today's high is 36.74. So it's got a way to go, and it's got a whole month and a half, 2 months to go to get to that next level of resistance. And that's what I'm talking about, the rotation through the different sectors. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back, and I want to finish up just what we were looking at, and then I've got a bunch of questions I need to get to as quickly as possible. So let me just finish doing the notation here. It's Marvell. I used to have Marvell. I've had Marvell notated in my work since the beginning of time. Just right now, I don't seem to have it, so I just did it real quickly. Okay, we'll be back into that in a moment. I do want to go, first of all, to the semiconductors. Semiconductors are up 585. That's a very nice break to the upside. So this is leg C. Another way I can count it, leg C. So it should still go to a D, still very positive. That's a good sign. The 269.66 high that was made back in earlier this year, I think it was around about February, slumped to 170 to the 200 period moving average, and whoop, come all the way back in a V-shaped pattern. It's really improved the monthly chart. So now let's go. I was in the middle of the metals. So gold is now down just $1.50. And underneath that inside track repellent zone, silver was doing very well. It's still doing well. It's up 65 at 36.800. Now, here again, not everything's doing the same sort of thing. For instance, we have CDE, which is core mining, used to be called lean. And that has kind of paralleled in many ways the price of silver. So it's looking very good. But today, now it's up 6 cents at 9.43. It should have broken to a new recovery high, and it hasn't. So this is what I'm saying, that even within a sector, you can have some stocks moving quite nicely. Look, it broke the Chapman Wave Inside Track repellent zone. This is CDE, and it's gone to leg D in the weekly chart. Look at PAAS. This is no, I typed it, but where did that go? PAAS. There it is. This has gone in a cup formation, very nicely. Pan American Silver up 76 cents at 29.40, going right to the 30.56 high that I targeted in the chart that I had drawn back in 2020. And what's the high today? The high today is 29.54. So it was within almost $1 of that previous high. That's the target that I have for it. And that's what I'm talking about, this rotation. That's why I was talking about the S&P 500 doing one thing, but the IWM, the Russell 2000, is now broadening out. Let's just quickly do the same thing for XLF. This is the financials. That's the S&P A, B, C, D. This is a very, very weak peak. A, capitals on the way up. B, C, D, right there, D. So I don't like D's underneath the previous highs. You've got to be a little careful here. But wait a minute, let's see what KRE is doing, which is the regional banks. And the regional banks are doing up 51 cents at 58.53 quite nicely. Look, broke the resistance level. Ha! I love what's going on because now you've got your rotation. You remember when I had that buy signal back in March the 6th of 2009 at the very day of the low Friday. The S&P made as low as 66 on Monday. And then I said 2 summers later, I said, wow, what a great clue we've got. Now we've got a clue that says rotational corrections, that we don't have to have a big smash, 90% of stocks go down at the same time. We get this rotational correction, and that can continue for a long time. Wow. And that has continued. So this could be the rotational correction as money is going to other areas, as the areas like a GE, which is pulling back a little bit today, down 2.23 at 253.40. And that's in a leg E, maybe a peak E today, getting a little, just visually, a little choppy, but on the purely technical basis, it's only the on-balance volume that says be careful. But I didn't want to get straight off the subject, which is GDX. GDX made a peak F at 54.62. So for 2 sessions, it's pulled back from that high. It's at 51.84. Nothing wrong, but it is digesting the recent gains, and there's a leg D in the weekly. And the target that I had for the market vectors, gold miners, ETF, GDX, was 55.25. And that went all the way back to, if I can even see it, back to 2012. Just that little peak back in 2012. That was a dreaded H pattern that failed. That was the target, and we're getting very close. All right. So then I just did that. High-grade copper. High-grade copper is HG. High-grade copper is up 0.05. Not bad, actually. Made a peak D. That's where you can always have a bit of a rest, and that's exactly what you got right now at 4.9005. SCCO, which is, there we go, Southern Copper, went to a peak D with Friday's lower high, and today it's still at a peak D, but it's doing much, much better. So high-grade copper is starting to show some signs of strength. I do want to go to questions. So did I? No, I haven't finished bonds. Bonds right now are trading down, about unchanged. So the TBT, that's the one we were looking at, is the counterpoint. This is the ultra-short Lehman 20-year Treasury bond ETF, which says that yields are going up. They're at 37.72, up 0.09, but it hasn't gone to a leg D yet, all the way at the 39s. It's down 37.74, so that's not bad. It's not an issue. That's all I'm saying. I did want to do one other thing before I went on. Oh, crude oil. Crude oil is up 27 cents in leg D. If we can get this at 64.85 on the continuous contract, if we can get to 64. If I can get to 64, no, it has to get to 65.75, and then the 65.98 200 period moving average will become a magnet to the upside. So it's holding quite nicely now. It's just stuck in a range, but it is moving up in the shorter term from the 54s. Hey, that's good. 54s to 64s. What? $10? $10? Yeah. $10, very good action to the upside. Okay, here we go. Reddit. Can you look at Reddit for long on your show today? It's been going sideways for a while now, but the company is still growing. They recently signed licensing deals with OpenAI and Google, who will license the content for the AI services. Okay, good. So, all right, what we've got here is down 31 cents at 120.98. Leg C, pushing away from the 200 period moving average, which has been like a magnet. Every time it goes above, it comes back. So Reddit Inc., social media platform, went to a peak G in the 230s. Was it? Yeah, well, let me give you the exact number. That was the week of the 14th of Feb. It screams up to 230.41. Oh, 230.41. So that was quite a beating down there, 230.41. All right. slumps all the way down to the 90 area, just above the 70s, just above the 200 period exponential moving average, and now it's trying to work. This is tough. I like the story that you have there. I'm just thinking that the chart itself says it's under pressure. It hasn't been able to break away, and I know that you like to look at longer term. So this is what I'm going to suggest for you. This is not for everybody, because I do think that we're going to have a bit of a pullback this week in the market. And Reddit, I think, will be there. That's the way it's looking right now. But why don't you start a position at 120.45? This is just like getting your foot in the door. You haven't got anything yet. Get your foot in the door, because the 9-period moving average is positive. It is over the 200-period moving average support, which is at 117, 3 points above. The MACD is good. Stochastic is okay at 79, almost 80%. I prefer if I could see it at 83%. On balance, start your position when at some point in the summer the MACD crosses positive as the histogram is improving. That will really send it up into the 148, 153 area. It hasn't got there yet. So just get your foot in the door, and just for this week, if you're prepared to have maybe a 5 or 6% stop on this position, that's the way I would do it. Let it tell you what it's doing. I'll be back in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So let's get to the questions here. So Oscar Health Inc. Down 46 cents at 14.95. Remember, we spoke about this, and I said it's kind of that 200-period moving average of 14.95. It's like a magnet. It keeps coming back to that until it can push away quite sharply to the OSCR as a symbol, until it can really push sharply away and get into the 1690, 1735 area, really start going back into the 17s to say it can tackle and go to a leg D above that 18 high that was made. It's kind of stuck, and that's what I think. So I would treat this as a stuck stock. Right now, it doesn't seem to be. If it held today and it just creeped even from the close on Friday into the 1590, 1610 area, so that's not bad. It's not great. It's got that resistance from the trend line, but this is not good. So I'm just going to say, be careful. It could be stuck money. In other words, you're not losing, you're not gaining, but it's just money that's sitting that you're not using judiciously. So I'd be a little careful. In fact, what I'd say, if you've got a profit in it, I'd take a chunk off and then say, hey, prove yourself. I'd rather add to you on strength than this kind of choppiness. So I hope that helps you. Looking out longer term, I have to say the same thing. It's making lower highs and lower lows in the weekly chart. Monthly chart is beginning to improve. It's held the 9-period moving average. That's a really big positive, but it just hasn't shown strength, sustainable upside strength. That's all I'm saying. And as I said, I'd rather add to this on strength than just being stuck as it keeps slipping. Okay? Hope that helps you. Next question was Marvell. Can you please check Marvell and the semis? Well, I did the semis a moment ago, but let me just do this. So Marvell is a kind of underrated company. Most people who know semiconductors know Marvell, but most people who just do the stock market, it comes up as a surprise. Marvell Tech. This is not Marvell, the comic company. This is Marvell Tech. Had a high in the 127. Wait, oh, I must have guessed. Yeah, 127.48 high back in January of this year. Comes tumbling down. Oh, what a tumble. Comes tumbling down to the 40s. 46 or so, and now it's trading up again at 72. This is nice. Higher highs and higher lows. It's got a resistance level that it's just taken out over the last 2 days. I like it. The weekly chart needs a lot of work to improve, but the daily chart is the only thing that can really help the weekly chart. So right now, that's what it's doing. Let me just put it this way. If you're in it, great. I'd let it ride. This is leg C, I believe. Oops. Yeah, that's your A. That's your D. And that's your A. I don't want to go into it now. It's not Technical Friday. But that would be your D. That would be your E/A with a preference as thinking of it as an A right there, because it came down and it held everything very nicely. And then another A and another B. And this is a leg C. If we can get to 70, this week, it's really, but this is the week, I'm telling you right now, by Wednesday. If we can get to the 70, actually it has to get to 74.20. to 74.80 to say that the 76.44 200-period moving average is back as a magnet again. It was for that brief moment right there back in February, March in the 83, 84 area, and then it broke down. It hasn't been there since, and it hasn't even come close. It needs to get, today it's getting close. That letter is obscuring it. There you are. It's getting close. Okay, for the first time, very often it gets close, then it pulls back, and then it has a spike, and that becomes a magnet. The closer you can get to the 76.44 level, as it touches 76, it'll become a magnet, and it'll glue itself to that line. That's the way I'm looking at it. Most importantly, on the downside, that red candle of Thursday with a low of 64.81, that's your key support. 66 to 64.81, key support this week if there's any sudden pullback. Okay, did that. Another question came in. Okay, so ISRG, so this is Intuitive Surgical. They're the ones that developed this robotic. It's so fascinating. Have I lost all? What happened that I lost so much information? Well, it takes me a second to get it, but I would have had these notated all the way back. Intuitive Surgical, a couple of, maybe 15 years? I don't know what it is. Maybe it's more than that. Had a friend who was, who together with a couple of other people started a business, Intuitive Surgical, let me just write Intuitive robotic Da Vinci surgical, robotic surgery. So he got into this business where they developed a set of instruments, tools, that did exactly what Intuitive Surgical did, but they did it was, I'm not even talking about inexpensive, because due to Intuitive Surgical, the reason why hospitals keep getting them is that it cost $1 million. Now it must be much more. So they had to service them. You're not going to throw it away for $1 million, right? But he developed this thing. It meant that the surgeons had to do a little bit more thinking for themselves, but the actual process was absolutely fabulous, he said. But they folded. They couldn't do it. They couldn't fight the system. Interesting. So Intuitive Surgical today is down 38, down almost 7%, and 518.31. I don't know if it's earnings or whatever it is, but the last move up was peak A, then another A right there, then a B. Remember, you just go alphabetically up the alphabet. D, E, goes to an F, pulls back. And then it doesn't break that F. In fact, this is the pattern that we're looking at in the Dow and many of the other charts, that some of them, not all, have not gone to new highs. They're right underneath, and they can make the dreaded H pattern that's dead, sharply down. So this says the 200-period moving average of 512 might be a magnet line, but if Intuitive Surgical closes for 2 sessions out of 3 below today's low so far is 498.17. Well, first of all, if it closes under 419.17, it's going to go down to the 480 level very quickly. So, but most importantly, what I am looking at here is it could tootle around if whatever is deemed very negative right now is less negative over the next 2 days, because it's got a Chapman wave red Roman candle. Day is not even just an hour and a quarter into today. It's young. But I'm just saying this action right now is very negative because it was rolling over and the MACD was down, stochastic was under 80%, on balance volume was weak, and only the 9-period moving average was good, and now the 9 has gone pink. But the day's young, it could change. But I'm just saying the weekly chart and the daily chart suggests that the low of today of 498, there's a good chance it's going to do testing of the 490s. That's the way it looks right now. If for any reason it's able to get to 536, it's at 520 right now. 531 was the gap down high today. But if it gets to 536 in the next week, that is very impressive. But I don't think so. It looks to me like it needed a rest, and it's certainly getting it right now. I'll be back. Dow's down 154. S&P's.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so just real quickly, Enovix ENVX is trading at 862. It's up 30 cents. What was the question? Enovix is a company that focuses on developing and manufacturing high-performance lithium-ion batteries, particularly those using silicone anodes, and they are known for the unique 3D cell architecture, allows for increased energy density, etc. So yeah, doing very nicely. The weekly chart has gone to a leg D already. It's very tiny little buy signal to buy mode. I don't usually like that. The 9-period moving average is still weak. It needs to do quite enough to go green. Monthly chart looks terrible. It always has this big spike, and they keep getting smaller and smaller over the months since 2022. This is the one that's going to be very important because the 200-period moving average is at 905 and is trading right now with a high of $9 and is trading at $8.63, up 32 cents. Yeah, keep this on your list. I wouldn't get too carried away. There are a lot of these things. There's one that we followed a long time ago. STEM also does the same kind of energy solutions, storage, EV, solar. Nice move up today. It's up at 0.619. It's up 0.05. They all look like this, but to really build energy on the upside, you want to see some follow through, and you want to see it on a weekly basis. You want to see 2 weeks of really strong move in the sector. But yeah, that's a good one to look at. But the other thing that I had a question about, let's see, bye Basil. Can you look at NBIS? NBIS, yes, I always look at NBIS. Nebius Group, NV, AI, Cloud, GPUs. And in parentheses, Jacob was right about the stock. It does the same thing that CRWV, another one that I said to subscribers we want to grab at some point, but it just keeps going and going and going. It does the same thing that CRWV does. This is CoreWeave, and CRWV has gone gangbusters. Is it too late to get into NBS? No, it depends on what your... Let me just explain. NBIS trading right now, and Nebius is trading up $5.80 at 54.12. So I had this over the weekend. There were a couple that I had on my list, and it looked to me that if they had any chance of gapping up in pre-market, they were gapping. So I just said, let's leave. I didn't even say anything. I just left it alone. That's tough. I would I just didn't want to do it right now, because we are at a point where I'm looking at all the upside resistances, and I'm suggesting that the market itself is getting tired. It's getting harder and harder to break out to the upside. You are getting this rotational aspect, and we're going to see whether this is the rotational aspect that doesn't bother at all on any pullback. The whole AI area, and Nebius is in that area. NBIS trading at 54.17, up 15.89. Now, what do you do? So, Eddie, this is what I would do. This move right today has gone, I don't know if it's a brand new leg B or it's this old E, but it's breaking out to all-time highs. Stocks that go to all-time highs tend to stay at all-time highs for a little bit, for quite a while sometimes. And whenever the market flips to the positive side, those are the ones that really take off and go even higher. So this is the only way I can do this at 54. Back just a week ago, when it was down in the 30s and 40s, it was a lot easier to be able to say, and I always kick myself when I'm looking at these things, and I know that it was on my list and it's right there and something, but we had positions that have done extremely well, and I didn't want to grab something that had the chance of, even though they would be very small, we always have very small percentage losses because we like to have the gains, and let the gains really continue after that. I was just looking at this and saying, I don't know if this is going to be in the area that works. Right now it says it's in the area that's working. Let me just go back to CRWV. It is up 17 at 157. And a week ago it was, so it's up 50% since just a week ago. And it hasn't made a new recovery high. So this is what I would do. You got two choices. Either you're going to grab it, and I know you're watching the market all the time. I have this, treat it as if it was a screamer, NBIS, as if it was not $54.44, it was $5.44. And what I do in a case like this is I say, it doesn't matter, you do analysis. And let's just say, yes, on Friday it closed at 48, was it? It closed at 48.28. And today it looked earlier on that it was gapping a little bit, maybe 2 points higher. So what you need to do is you say, I'm going to grab it on the first pullback, even though it's a gap up. So let me just put this on a 10-minute chart. So NBIS. So NBIS, you can see here's the trading from the 9th. So there, it gaps up and then it pulls back. So it was at 48. I wouldn't over 48 something. I wouldn't pay more for a screamer, a potential screamer, thinking of it as a $5 stock, not as a $50 stock. I wouldn't pay more than a certain percentage, right? So I would have said $5.50. So let me do this. $48.23. So let's just say 48 and a half was the close, right? I wouldn't, $4.80. I wouldn't want, and it's starting to gap. I wouldn't want to pay more than $5 maximum. And the way I would do it is I'd put in not a full position. I put in for some part of a position. And if I get it, I have a very tight stop. And if I've now got it and now it's starting to move, I immediately have, this is the modus operandi. I immediately take off a little bit if it gives me even a little bit of a gain. And then I say, okay, now I can make a stop, and I make a stop underneath the low that was just made. And then I just let it run. And if it runs and it keeps going, I say take a little bit more off. But it has to be thought of as a day trade. Now, let's just say your initial position, you're thinking of it as a $4 and, you're thinking of it as a, $4.80 stock or 60-cent stock, and you're getting it just under 5. Now, what happens, the higher it goes, the more you have to raise your stop. And you might be out by the end of the day. Or if you've got a little bit left, and it continues high over the next couple of days, you've now got yourself a really nice entry point, and now you can think of it in a different way altogether. But that's the only way you can get in. You close your eyes, you got to put it in with a stop, you got to close your eyes, then you open your eyes, say, did I get it? Yes, and then you raise your stop, you take a little bit off, each time you take a little bit off, and let a call run as long as it can. That's really the only way you can do these things. And don't be afraid, because it's discipline. You stick to your discipline, you should be able to do it. Okay, so talking about discipline, there was a big spike. It's gone from 6,000 in the E-mini all the way to 6,018, and now it's come back to 6,006. And this is exactly what I'm talking about. I think that we're beginning the rollover process. It doesn't say big crash or anything, and it's even hard. How do you play this with a short position? It's going to be tough. I'll talk about when we return, but I did want to get this. And the other thing is CRWV is in the same category, and it is screaming up. It's up 16 today alone.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I believe this question is for me in the Tiger YouTube, and it says, for your recent SOXL, that's 3 times long, the SMH's, recommendation, do you think you make stops too tight for a 3 times ETF? Looks like we just missed a nice pop. Absolutely, I agree 100%, but I did mention that because this market at this particular point was looking quite shaky in the sense that we didn't get strong, big candles to the upside to new recovery highs, I had to make it quite tight, and I did. I said at the time, it's going to be tough. We did take a little bit off, but not as much as we wanted, and we didn't keep anything. So absolutely. So the SMH is what I'm talking about, this rotation. Look, this is a market, even now as we're talking, is rotating. So only a leg C in the SMHs. So unfortunately, yes, because this should still go to a D. There's no other way you can count it. So there's still internal strength. So that's why I'm saying I don't want to go short yet. I'm looking at it. I still see strength. I don't want to get in the way of it. You're absolutely correct. And absolutely that mea culpa with the SOXL, we just got taken out and then it spiked even higher. But that's the way it is. And so let me just sum up right now. So on Friday when I was doing during the time I was actually doing live my video for subscribers, like it's like a webinar almost, Robin Hood suddenly starts streaming to the upside. It goes to 80. 80 is, it hasn't made an all-time high. 85 was the all-time high. It almost went to the 85 level, and then it suddenly turned down. That had to do with, I don't know what it was, there was rumor to say that it was going to go into the S&P 500 and the rebalancing. It didn't, and it came down sharply. And today it is down. I didn't want to get it now because it's at a leg D with a doji candle, but it made that high, 77.80, and now this morning it went down to 68.58, and now it's trading at 70.52. Buying is still coming in, but the leadership is just starting to winnow as we talk. And I'll talk more about it tomorrow. Check out my Opening Call Daily newsletter. We have had some really nice positions. I'm watching G as well. Have a great day. I'll see you tomorrow. Check out my Opening Call Daily newsletter.